Happy VA Wednesday. So today I'm going to give you 3 tips to watch out for if you're doing a VA refinance so that you're not taken advantage of. Recently, one of the nation's largest VA lenders was slapped by the CFPB again. This is not the first time. This is like, I think, the 3rd or 4th for deceptive advertising. That's right. Unfortunately, it seems as though VA loans and deceptive advertising go hand in hand. If you're a veteran receiving the offers in the mail, you've seen them, you know. Okay, so let's talk about tip number 1. Tip number 1 is that when you're looking at refinancing, you want to make sure the lender, if they're comparing your old payment to your projected new payment, it's apples to apples. Now, what this company was doing is they were showing the current payment, including taxes and insurance, versus the new payment without the taxes and insurance. Now, did the taxes and insurance disappear? No, they just didn't show them. And they said, oh, it's a clerical error. Okay, look guys, I'm a lender. I can tell you right now that if I'm trying to sell someone a refinance, if I showed them, like let's take Texas for example. Texas, your taxes and insurance could be $1,000 right there. If I showed a refinancer, a borrower, a payment that was $1,000 higher, it doesn't even matter what I show with the new payment if I take that $1,000 out. It's totally deceptive. It's so deceptive because ultimately, yes, they are going to have title and insurance. So what should have happened? It's simple. If you're comparing principal and interest, taxes and insurance, and then a new payment, principal and interest, taxes and insurance, you got to have all the same parts, right? So for instance, when I'm quoting out a refinance, I don't even mess with taxes and insurance. I say, hey, here's your principal and interest now, and here's what it would be with the new loan. This is the projected savings. I do that because the taxes and insurance don't actually matter, right? You're still gonna have them. There's no change there. We're not refinancing your taxes and insurance, we're refinancing the rate. So in this case, you know, showing that big payment that has the taxes and insurance, and then showing this much lower proposed payment that doesn't have taxes and insurance, of course it looks amazing to borrowers because they're assuming they're going to get this new low payment and that it includes the taxes and insurance. Total technicality, right? So it's like if you were a borrower that was deceived by that, you get the bill and you go, oh, and they go, well, it still has taxes and insurance, of course. And you go, well, but why didn't you? Oh, well, we did. We did in the paperwork that you never read. I know. It's just ridiculous. It's totally ridiculous. So yeah, they got fined. They got fined $2.5 million, which was actually really low for what it is. I think it should have been a lot higher because that's so clearly deceptive, you know, and I think they only fined that much because they said it was clerical, but I can tell you right now, as someone who quotes refinances, it is so much easier to sell a lie like that than to be honest, right? So I don't buy the clerical thing. Make sure the lender's comparing apples to apples. Tip number 1. Okay, tip number 2. What is the recoupment period? That's a very important question. So what recoupment means is how long does it take for this refinance to pencil out, right? Because when you're refinancing, there's different ways to go about it, but some lenders will give you a slightly higher rate and they'll cover the fees, but then some lenders will do the lowest rate and there are fees. The key is this: how long does it take for this refinance to pencil out? It's not a hard calculation for us, okay? You know, where we see the ones where we're like, oh my God, they were trying to sell you this, it's when there's lots of points, whenever there's lots of points. Or it's like, they're only bringing you down a small amount and they're like, oh, but we're covering the closing costs. But if you're not exempt from the funding fee and that keeps on getting tagged in when they're doing this, like it adds up. So you really want to make sure the lender's happy to go over with you, you know, if there aren't, you know, any fees, what is the rate? What is the rate with fees? And, you know, is the fees being rolled into the loan? Because sometimes they'll say no out of pocket, but they're charging fees and rolling it into the loan. Now, what do I usually do? It depends on the scenario. I usually give options. So I'll do an option where we're getting the lowest rate and the fees are there. We waive our lender fee on VA loans, but there's always title and escrow. So it depends on the state, how much it is. Some states are way more affordable than other states. So, you know, if for instance, let's say that you originally had a house in Illinois and you're like, oh, refinancing was so cheap, but now you're in Florida, it's more expensive in Florida to refi than Illinois. So you really want to make sure the lender's giving you options, okay? What is it with the fees? What is, you know, if you pay it out of pocket, if you roll it into the loan, right? Because it's going to increase the loan amount. And then third, you know, if there's really no fees and I'm getting a lender credit to offset it, how much higher is the rate? Because sometimes it doesn't make sense. Sometimes it does, okay? But the key is know your options. Now, number three, this is more of a structuring thing. Look, whenever you're looking at refinancing, you want to make sure that you're working with a loan officer that knows what they're doing, but also isn't just an order taker. And I say that because a lot of times people go, it's a VA IRRRL refinance, those are hard to screw up. True, but there is still some structuring that comes into place. Like, for example, you know, I have clients where maybe they have credit card debt and we don't want to do a VA cash out refi because if they're active, the funding fee is going to be a lot. It's going to be 3.3%. Whereas if I do a VA IRRRL, it's only 0.5%. So in certain states, like example, Texas and Florida, their taxes are due at the end of the year. So right now, if I do a refinance, I can build the taxes into the new loan amount, do a slightly higher loan amount, and then they get the money from their escrow account back and they can use that to pay off debt. I like doing it that way because sometimes people are like, oh yeah, I'm gonna do a VA cash out and take out 15 grand, but the funding fee is so high, it's eating up most of the money they're taking out. Whereas depending on the time of the year, the state you're in, doing a VA IRRRL and just setting up a new escrow account and getting that refund can be a good way to knock out debt. So you wanna make sure that you're talking with a loan officer that is thinking about this from different perspectives, right? Because a lot of times, you know, they may not have the experience, it could be that. They may not also like care, right? You know, the 3.3% funding fee on a VA cash out refi, that's a lot of money, okay? It's a lot of money. So, you know, if you're exempt, great, you don't have to do it. But if you're not exempt, if you're considering a VA cash out refi, like you really need to pay attention. And also certain states like Texas, you can't do a VA cash out refi. It's not a thing. So you want to make sure you're working with a lender that knows all this. So experience counts because the last thing you want to do is refinance, right? And there's a lot of lenders that pitch it as, oh, well, we'll just do it again, we'll do it again, we'll do it again. Look, if you don't have the funding fee, okay, and if the lender is able to drop your rate substantially and cover all the fees and you can slowly ride the market down, potentially it could be okay. But you are restarting your loan term every time you do that. So is that something you'd want to do over a 3-year period? No, okay? Now, if you have the funding fee, you need to be more mindful, right? So for instance, there's a lot of clients I just started reaching out to and like the drops are over 1.5% from where they are because I'm keeping into mind like, okay, how far do we want to see if the market goes down to? What's our risk? But then this funding fee, like I want to make sure it has enough impact. I don't want to do a refi too early and have them end up doing, you know, 2 more. So there's a lot that goes into this, but I just wanted to do a quick video based on what I was seeing. Ask questions. That's the key. With any of this, you want to make sure you're asking questions. Ask. And a lot of times, you know, if you just get the refinance documents without talking to the lender, you're going to be like, ah! But sometimes it's not scary. And sometimes you should be looking at them and screaming. So look, if you have a loan estimate for right now for a refinance and you want us to check it to make sure you're not getting ripped off, we're happy to do that. If you want to talk about these scenarios, let us know. But watch out for those things, okay? And look, we're always happy to help. Licensed everywhere except for Utah and Rhode Island. We do a lot of VA IRRRLs. Thanks for watching, guys.